Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1648, and today's date is August 16th, 2018, and the title of the episode is Economic Strategies That Are Being Used Today Mimic the Founding Fathers. Let's get into the economic collapse financial news. Now, we know that there's a battle going on between two sides, and we understand that the economy is being pushed to the edge. This is why we see the manipulation of the GDP numbers. This is why we see unemployment numbers. This is why we see all of this looking fantastic. There's a reason for it. The push is to make the economy look as best as it possibly can. Because on the other side, the central bank, the deep state, what they want to do is they want to blame this entire system that's going to collapse on the Trump administration. And we've already seen articles where they're saying they're expecting recession in 2020. They were expecting the system to come down before this. And they keep talking about how the tariffs are going to ruin the economy. They're all doing this on purpose. They're projecting right now. And we've heard Q say this before, that the mainstream media and the rest of the financial pundits and others like to project before they go ahead and they do something. And of course, what is happening here is that the Patriots, they're trying to get the central bank to raise the rates even faster. And of course, what the central bank is doing right now is they're stepping back. Now, we're seeing a lot of information come out. We know that retail stores, they're having a lot of trouble. Yes, they all have online presence. They all use online for their sales, but they're still in trouble. And these are a lot of the expensive stores or stores that were charging top dollar for their items. They're not discounted as much as many of the other stores. And we see stores that are popping up and that are taking up the space within these strip malls. These are discounted stores where they get products in from those main stores and they sell them at a cheaper price. So stores like JCPenney, Sears, and the rest, they are failing. Especially the more expensive stores like BCBG and the rest, where they're not really discounted stores, they are failing. Now remember, a lot of the other stores like TJ Maxx, Ross Simon, Marshalls, these are the discount stores that receive the apparel from these other stores and discount them quite a bit. So a lot of people can go to these stores and get those outfits, but the prices they're paying are a lot cheaper. And a lot of people are going to be shopping at stores that are a lot cheaper than the normal everyday supermarket or, other department stores. Today we see Walmart. They are saying that their sales are the strongest in 10 years. And they're saying that everything looks fantastic. Now, the company reported U.S. comp sales, ex-fuel, up by 4.5%, more than double the estimate of 2.2%. And the strongest Walmart U.S. comp in more than 10 years. And this was led by groceries, because we know a lot of the Walmarts have grocery stores within the entire store, and a lot of it was due to groceries because they sell groceries at a much cheaper price. The other is apparel. Yes, their clothing is much cheaper than many other places. And a lot of people now are shopping at these inexpensive stores because they can't afford to go to the more expensive stores. And we see this with the dollar store. We also see Five Below popping up in many areas. Now, yes, they said their online sales, they have increased. And if we look at their online sales, we say they're up by 40% year on year, an improvement to the first quarter, which was up 33%, and the fourth quarter, which was up 23%. Yes, online sales, they're going to gain over time. Does it mean that it's up 40% and all their business is going to online? No, it doesn't. So what we're seeing right now, people are shifting in where they're spending their money. Now remember, they also had stores closed down. We have many other stores closed down. So there are fewer and fewer stores where people go shopping. So what's going to happen? The sales at these stores, they're going to increase. And this is really what we see happening here. And stores like Marshalls and TJ Maxx and the rest, you're going to see sales there increase because people aren't going to the more expensive places. They're going to the discount area and they're getting the same exact clothing. We also see the Philly Fed, their survey has crashed to pre-election lows. And their headline crashed to 11.9. Now, this is the lowest since November 2016. This missed expectations of 22, and it is completely the opposite of what they thought was going to happen. Same thing with housing starts. They collapsed 12.9% in June, and they only rebounded in July to 0.9%. Now, they were expecting a bounce of 7.4%. They're not seeing this happen. Now, remember, start at May, June, July, August. These are the strong months for real estate. And when you look at this, it looks like it is the weakest months for real estate. So this is a second month in a row with a massive miss to economists' expectations. Housing starts are now down year on year for the second month in a row. We see U.S. home builder stocks, they've been tracking fundamentals dramatically lower all year. And we know from existing home sales, new home sales, real estate is not doing well. U.S. mortgage refinancing dropped to the lowest since the turn of the century. And of course, what we know right now is that interest rates are moving up. And this is coming from the Mortgage Bankers Association. So when we look at this, we can see that the real estate bubbles, they are starting to pop. And it's not just here in the U.S., it's around the world. And we see the mainstream media, they are out there, and they're trying to put a spin on why the Fed might lower rates. Now, this is very interesting. This is coming out of CNBC, and it says Trump might get his slowdown in rate hikes, but for the wrong reasons. Trump's trade wars could slow the economy and thus cause the Federal Reserve to pause in its current rate hike cycle. So already the corporate media, and we've seen this before in many other articles, they're already projecting out there that the tariffs and what Trump is doing with trade wars is going to slow the economy. Now, of course, as we know, the economy is being manipulated right now to make it look like it's doing fantastically. The mainstream media, they don't have control over what is happening here. Neither really does the Fed. Yes, they can raise interest rates, they can lower interest rates, they can create currency, they can prop up the banks, but the data is coming from the government. And it looks like what Trump is trying to do, he's trying to force the Federal Reserve to raise the interest rates, even though he said it's not a good time to raise the interest rates because we have debt coming due, but you do what you feel is best. Now, the Fed right now, through the mainstream media, is saying that they might slow the rate hikes because of what Trump is doing with the trade wars, with tariffs. So we can see right now they're trying to set it up and they're trying to figure out a way where this economy will break down while Trump is in office. And this way they can use the excuse of why they can stop raising the rates, because they don't want to raise the rates anymore right now, because what's going to happen here is the Fed is going to lose the narrative. As they raise the rates, the economy is going to continually break down. As they unwind, it's going to continually break down. Trump and the Patriots are going to point the finger at the Fed as they keep doing this, because they're going to say, hey, look, the economy is doing fantastically here. Look at our GDP numbers. Look at our unemployment numbers. Incredible. And we have tariffs going right now. And the Fed is raising rates and destroying the economy. I said it wasn't a good time to do this. And that's coming from Trump. And when the economy starts to break down, they can point the finger right at the Fed, and they don't want this to happen. Now, we see that many countries are dumping the treasury bonds. Russia, they have dumped a lot of treasuries, but it's not the only country. We see China's holdings of U.S. treasuries drop by $4.4 billion from $11.83 billion to $11.78 billion. We also see Japan. They dumped $18.4 billion of treasuries. German holdings also dipped from $78.3 billion to $71.2 billion. But there is one place where they are purchasing the treasuries. No, it's not the UK. No, it's not Italy, France, or Spain. No, it's none of the places that you think. It's the Cayman Islands. Very interesting. They increased their holdings from $185 billion to $197 billion. This is the highest since November of 2017. And this is very interesting. So we can see there's many countries they are dumping. They're getting out of treasuries. They know exactly what's going to happen, and this is going to continue. We know a lot of countries are moving away from the dollar. We know that Russia made a call to use the national currencies of each country instead of using the dollar, and I believe this is the call to start the entire process. And we're starting to see countries do this. Now, what's very interesting, the corporate media is continually playing it up that Trump's tariffs is going to bring down the entire economic system. First of all, the economic system was coming down way before Trump even came into office. The whole thing was built on an illusion. And we went over all the numbers in the past. We discussed unemployment, we discussed GDP, and we knew that this was a complete breakdown of the system, even though they've been trying to convince everyone that it's incredible. Same thing with the real estate market, and now we see real estate breaking down in many, many areas. Actually, people have been writing in saying, yes, we've noticed a very, very big change in real estate right now. But if we go back in time and we look at what the founding fathers did, they used tariffs to build this country. One of the very first acts of Congress was the passage of the Tariff Act of 1789. President George Washington signed it into law on July 4th, 1789, commemorating the young nation's Declaration of Independence. Washington went on to say, "A free people ought not only to be armed, but disciplined, to which end a uniform and well-digested plan is requisite, and their safety and interest require that they should promote such manufactories as tend to render them independent of others for essential, particularly military supplies. The United States could not depend on merely importing inventions from other nations," Washington said, "but must take measures to produce goods at home." Now, Washington's Treasury Secretary Alexander Hamilton, a year later, wrote in his report on manufacturers, "The wealth, independence, and security of a country appear to be materially connected with the prosperity of manufacturers. Every nation ought to endeavor to possess within itself all the essentials of national supply. These comprise the means of subsistence, habitation, clothing, and defense." Now, a University of Chicago professor, William Hill, observed something very interesting in 1893, that the great expansion of commerce from 1793 to 1807 brought much wealth to this country, which enabled the industrial development to be more rapid when it did come than it could have been in 1790. Now, one of the main objectives to Trump's view of history seems to be rooted in the misunderstanding of the famous Boston Tea Party. This was not because people didn't like tea. This is not because the king wanted people to drink tea. The Boston Tea Party was not a rebellion against a tariff aimed at fostering or protecting domestic industry. It was instead a reaction against the Stamp and Townshend Act, which were imposed taxes intended to extract revenue from the American colonists. They bore no resemblance to the tariffs of George Washington, Thomas Jefferson, and the other founding fathers. So when we look at this, the country was born with tariffs, saying that manufacturing needs to be in this country. And it looks like what is being used today is what was used back then. We need to bring back manufacturing. We need to bring back the U.S. to the way it was. And this is all being prepared right now. Is this going to happen within a central bank system? No, it's completely impossible. This is why we need to get out of the central banking system. And this is why there's such a push to remove it. And this is why Andrew Jackson is hanging on the wall of Trump's office. This is why he's pushing the central bank. This is why he made the remarks against the central bank. And soon, the move will be to get rid of the central bank. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.